Assalamualaikum warahmatullahi wabarakatuh. Ladies and gentlemen, I'm Tumidin from University of Muhammadiyah, Gresik. My article with Umaymah and Muhammad Agung Sugianto. My article, the title is Sharia bond rating model based on financial ratio. This conference on UMB conference. For the introduction of the research is every investor always expect of result from this investment activity. However, as mentioned, there's always the possibility investor expectation which not met reality on this. Every investor have always risk. And investors use the service of rating agency to get information about bond rating. A rating agency is an independent institution that issue rating appropriate information on credit risk for various debt or bond rating. Rating agency use variety factor to rate rank a corporate bond. One factor used by rating agency is available on information as accounting reports. One of them rating is determined from the result of company financial statement. So company financial statement have effect on bond rating. The instrument of bond rating from financial statement of a cost. If so, company performance if good, its bond rating will be good. It means like that. Yeah? And so that's many investors will be interested about financial statement to make decision about a bond investment. One way on make financial ratio looks good is to do earning management. So good financial statement, and there's earning management. Earning management can is an action taken by company manager to influence reporting earning. Considering that one of factors the bond valuation includes financial statement, and the issue of corporate bond rating tend to encourage manager to carry out earning management to influence the acquisition of bond rating. My research question is whether leverage, liquidity, solvency, profitability, productivity have effect on Islamic bond rating. The theory of bond rating, we use the signaling theory to explain the relation of company to profit financial statement information external party. This means as investor, stakeholder, and this is related to information asymmetry between the company management and outside party. This is important. The company management has more information and know what's prospect of the company for next time, is next year. Then is next month on 2 or 3 years next time. In the practice, accounting standard allow manager to choose accounting policy in the reported earning, but This policy creates opportunity manager, and manager can manage earning. So the earning look like it's good on grades. Yeah? For this decision for manager to report their earning and financial statement. Several things about motivation manager to perform earning management include meeting on internal target, meeting external target, income smoothing, yeah, beautifying financial report for sales purposes IPO, initial public offering, or obtain loan from bank is motivation of manager from financial ratio. Uh, my recent hypothesis is five. Yeah. The first is the leverage ratio influence the bond rating, the liquidity ratio influence for the bond rating, the solvency ratio influence the bond rating, the probability ratio influence the bond rating, the productivity ratio influence the bond rating. For next, research methods. Quantitative research used for answering the question. And this research have some sample from Indonesia Stock Exchange. The sample of the study was selected from population of company whose bond are registered with rating agency PT Provindo, yeah, and traded on Indonesia Stock Exchange. The sample takes were taken using purpose sampling methods with following criteria. One is encouraging company in the delisting list, and rating terminated by OJK. Company whose bond rating are registered with Provindo, company that's published complete audited financial ratio during the observation period. So this purposive sampling. So next, we use measuration of bond rating. Yeah, it means we have scale from 1 to 20. Yeah, the scale of 20, it's mean triple A. 19, double A plus, and so on. And the end of the rating, its mean is D, default. It's scale of 1. This from investment grade to non-investment grade in the measurement of bond rating. The independent variable, the totally is 5. First is leverage, total debt divided by equity and liquidity, cash plus securities divided current debt, solvability, it's long-term debt divided by equity, profitability is earning after tax divided equity, and productivity is sales divided fixed asset. Analysis of this research, we use OLS regression, ordinary least square regression. Yeah. Next, the result of the research, we find 29 sample for this research. The result of the multiple regression look like this. The effect is not significant. Liquidity significant for 10%. Yeah. And have positive. Solvability have a significant on 1%, and they have a positive impact. Yeah. Profitability significant to 1%, the negative impact. Yeah. Productivity have significant for 5%. The productivity have impact of positive. So the result of hypothesis one is rejected, yeah, and the other is okay. On the conclusion of this research is Islamic bond rating can be predicted by financial ratio. The results show that the 5 financial ratio, namely leverage, liquidity, solvency, profitability, and productivity can affect Islamic bond rating. The 5 variables turn out to be on the 3 variables, namely solvency, profitability, and productivity, which has a significant effect on Islamic bond rating below the 5%. One of the variables, namely liquidity, have significant effect on the 10% Islamic bond rating. Investors should pay attention to financial securities investing in Islamic bond. Yeah? Research can be done by testing bond yield on financial ratio. Thank you. This is my presentation of this conference. I need a comment for the research. So good for base of article. Thank you. Assalamualaikum warahmatullahi wabarakatuh.